Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're focusing on the significant shifts in Canada's mortgage interest rates for 2024, which have been largely driven by the Bank of Canada's monetary policy changes. For those considering buying a home or refinancing, understanding these changes is crucial as they could shape your financial decisions for years to come. The Bank of Canada, in an effort to stimulate the economy and control inflation, has made substantial cuts to its overnight rate, reducing it from 5% in June to 3.75% by October 2024. This move directly impacts mortgage rates, making borrowing potentially more affordable for homeowners and prospective buyers. Let's break down what this means for fixed-rate and variable-rate mortgages. Fixed-rate mortgages, which offer stability and predictable payments, have seen rates ranging from 4.64% to 4.89%, depending on the lender. On the other hand, variable-rate mortgages, which are tied to the prime rate, have seen the best rates start at around 4.85%. These changes provide opportunities for lower monthly payments, especially if rates continue to decline. The impact of these rate changes extends beyond individual borrowers. Lower rates can enhance overall home affordability and stimulate consumer spending, which in turn can boost the housing market and broader economic activity. However, these benefits come with the need for careful consideration of individual circumstances, as market conditions can change. Economists are keeping a close eye on inflation trends, suggesting that further rate cuts could be possible if inflation remains under control. This potential for additional rate adjustments makes it vital for homeowners and buyers to stay informed about the Bank of Canada's updates and economic forecasts. In addition to traditional fixed and variable mortgages, there are also alternative options to consider. CMHC-insured mortgages allow for lower down payments, making them attractive to first-time buyers. Home equity lines of credit and adjustable rate mortgages offer further flexibility, though they come with their own sets of risks and considerations. Finally, working with a knowledgeable mortgage broker can be incredibly beneficial in navigating these changes. Brokers have access to multiple lenders and can help secure better rates or terms that align with your financial goals and situation. The Canadian housing market has kicked off the year with a notable increase in new home listings, while sales have seen a slowdown, leading to a more balanced market landscape. According to the latest data from the Canadian Real Estate Association, new listings surged by 11% in January compared to December 2024. This marks the largest monthly increase outside of pandemic-related fluctuations since the late 1980s. Meanwhile, national home sales experienced a decline of 3.3% month-over-month. This shift in market dynamics is reflected in the national sales to new listings ratio, which fell to 49.3%. This indicates a change in conditions that could potentially benefit home buyers. Sean Cathcart, the senior economist at the Canadian Real Estate Association, commented on these trends, highlighting the unusual timing of the increase in supply and the weakening in sales towards the end of January. Cathcart attributed this to uncertainties surrounding tariffs, which, combined with higher supply, have softened pricing, particularly in regions like British Columbia and Ontario. Despite these changes, home prices have remained relatively stable. The MLS Home Price Index was virtually unchanged, with a slight decrease of 0.08% on a monthly basis, and a minor increase of 0.07% year-over-year. The non-seasonally adjusted national average sale price in January 2025 stood at $670,064, reflecting a modest 1.1% increase from the previous year. With a greater number of properties available and softer price growth, experts suggest that home buyers are now in a better position to negotiate. Leah Zlatkin, a mortgage broker and expert from lowestrates.ca, noted that the current environment enables buyers to negotiate price adjustments, request seller concessions, and include protective conditions such as home inspections or financing clauses in their offers. However, Zlatkin also advised caution with mortgage choices, particularly due to potential interest rate volatility. She suggested that in this economic climate, homebuyers might consider opting for short-term fixed-rate mortgages to better manage risks. Looking ahead, while a more active spring market is anticipated, there remains a looming threat of a trade conflict with the United States, which could affect buyer sentiment. James Mabey, chair of the Canadian Real Estate Association, emphasized that although some may hesitate due to economic uncertainty, the current lower interest rates and more balanced market conditions present opportunities for others. In our final segment today, we're turning our attention to a significant development in the town of Espanola, Ontario. The Government of Canada and the town of Espanola have reached an agreement to accelerate the construction of 64 homes over the next 3 years. This initiative is part of the broader Housing Accelerator Fund, aiming to spur the construction of 400 homes over the next decade. The Housing Accelerator Fund, launched in March 2023, is a substantial $4.4 billion initiative designed to cut through red tape and fast-track the building of new homes across Canada. With this funding, the government aims to address the housing crisis by building more homes faster and at prices Canadians can afford. The fund is part of Canada's National Housing Strategy, which is considered the most ambitious federal housing plan in over 40 years. The agreement with Espanola, announced earlier this week, will provide over $2 million to eliminate barriers to housing construction. This includes speeding up the permitting process and increasing housing density, particularly in areas near transit and post-secondary institutions. The local government has been encouraged to develop bold action plans to unlock funding and ensure timely implementation of housing initiatives. Espanola's action plan includes 5 key initiatives, such as supporting infill housing with zoning amendments to increase and diversify housing density. This involves incorporating multi-unit dwellings on all lands designated as residential. The plan also includes a review of policies related to height restrictions and minimum lot sizes, and a climate adaptability plan to support energy-efficient housing. Additionally, the town of Espanola is set to establish partnerships with local and regional providers to expand public housing offerings. The action plan aims to reduce approval timelines through process improvements and the implementation of electronic permitting, making the overall process more efficient and transparent. The Honorable Nathaniel Erskine Smith, Minister of Housing, Infrastructure and Communities, emphasized the government's commitment to removing barriers and cutting red tape to enable housing development. Meanwhile, Mark G. Saray, Member of Parliament for Nickel Belt, highlighted the importance of streamlining the permitting process to ensure residents have access to affordable housing that meets safety standards. Espanola's mayor, Douglas Gervais, expressed gratitude for the substantial support from the federal government. He noted that small and rural municipalities like Espanola can play a significant role in addressing Canada's housing crisis, and with the support from the Canada Mortgage and Housing Corporation, the town will continue striving toward being one of Northern Ontario's fastest-growing rural municipalities. As we wrap up today's episode, it's clear that efforts like those in Espanola are crucial in tackling the housing challenges faced across the country. By removing barriers and investing in community infrastructure, the government and local leaders are working together to make housing more accessible and affordable for Canadians. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.